What does it mean? What does the midterm markets, what does the midterm elections mean for markets for you? Softer dollar, sir?
Good morning, Manus. Well, as far as I'm concerned, and when we look at the result and the outcome, what seems to be a split Capitol Hill, I think the markets will react to this as back to fundamentals. When you look at it, it's not that surprising for an incumbent government to suffer some setbacks in midterm elections. Secondly, when you look at the history of presidential terms, they do make one or two major reforms per term. So you could say that this has happened in the first 2 years of the current administration. So I think right now what we're going to see is that markets go back to fundamentals and where is the economy is going. It may mean there's no longer another leg of fiscal stimulus, but frankly, this is not what necessarily needed given how the economy is performing, where the labor market is, where inflation is. And so I think we're going to get into the early on into the 2020 election cycle, and markets will react more to fundamentals than all that noise for the next few months.
So one great line, Jean Raby, from Robert Shiller. Now he's a lot more intellectual than me. He's got a Nobel Prize. He says there's going to be fear and chaos in the markets because the pro-growth strategy might be challenged. Does that challenge your US equity exposure? Will you reduce or change your US equity exposure as a result of the House flipping?
Well, I don't think it's the midterm elections outcome that will drive our asset allocation today. We invest for the long term. And so if we react to short-term movements like this, I don't think we're performing our role as an advisor, as a long-term investor. Now, the U.S. economy still has strong fundamentals. You may argue that we're at the end of a long cycle. You may also argue that given all the signs we're seeing today, there's no recession in sight. You may see slower growth going forward. So it's the second derivative that can play a role. But markets still are expecting 10% earnings growth in 2019. That's still very robust. Is it too optimistic? Maybe. Who knows? We'll see. But for the time being, I don't think this is going to be fear and chaos in the markets, frankly. I don't agree with that.
Good. I'm glad that your glass is half full, more half full than Robert Shiller's. Can I talk to you about the business and the job in hand, Jean Raby, which is about getting assets under management, getting them in under your belt. Now, Natixis has a target of 100 billion euros in terms of net inflows over the next 3 years. Is that proving tougher to get there? How do the numbers look in terms of inflows?
Well, we've had a very strong first half. I'm in the quiet period, so I will not comment on our flows for the third quarter. But, that objective is for a 3-year period. It does have ups and downs. We are expanding the scope of what we do. We're expanding the scope of our strategies. We continue to be looking for managers that can add to our strategies. We've announced 2 of such acquisitions in the first part of the year. We're continuing to look at other teams that want to join us. Our business model is very accommodating for active asset managers who have a brand, who generate performance, and who can be complementary to our current roster. And frankly, in that space, alternatives remain a very big focus. We made an acquisition in private debt. I think given where interest rates are today and the likely trajectory that we can see over the next 2, 3, 4 years, there will still be a need for further opportunity in yield-generating strategies. So we continue to be positive on that. And of course, Asia remains a big area of focus, and spending a fair bit of time in that region, talking to management teams that want to join us. The advantage of our business model is that it's quite attractive to management teams. So we're a bit in a good market position in terms of discussions with management teams. It takes time because it's a people's business, and we're careful, but we are on track with our 3-year plan. I don't look at it from a week-to-week basis. I try to plan this over the long term.
I can't let you disappear, so in 30 seconds I want to know what size of teams are you talking to? Teams of 10, 20, 30, 50, more? What's the size? Come on, you can't whet our appetites like that.
Hey, listen, every team finds a glass ceiling at some point, be it 2 billion, be it 20 billion, be it 200 billion. It really depends on the circumstances. So we have variety of dialogues across the spectrum.